Hi, my name is Sunil Kalra. I'm an angel investor based out of New Delhi. Um, I have been investing in startups since 2004. Uh, the model, of course, has changed. My first few investments were large investments in businesses that I felt I would like to participate in. Uh, One of these businesses was setting up and building from scratch a university in Dehradun. I came from a manufacturing background, from a business background, and this was quite new to me. And it took me a while to get my bearings, but till date, on a global basis, I have invested in 110, 120 startups. Leading an investment round is a big decision. You're putting more than your money at risk. You're also putting your reputation at risk. We all know that the success rate in startups is not in favor of the startups. It can be a difficult journey, and not everybody makes it. So I think it's very imperative for me to connect very closely with the entrepreneurs and to really believe very strongly in what they're doing, so that I could pick up the phone and then speak with colleagues and friends and co-investors and invite them to participate in a round. It also takes sitting down with the team and really understanding how much money they need and for what duration and what milestones they hope to achieve, because sometimes the numbers that are presented don't really add up. So it takes a lot of work, and unless you find a team that you can really relate to and you really feel close to, I would not lead the round. That said, there are many rounds that I participate in where I'm not the lead, and that's really about areas that I have very little or no understanding myself. It's not just as simple as let's build a business. It's very deep in terms of science or in technology or in IP. And in those cases, I have to sometimes find the right lead that I can co-invest with and be a co-lead, or just be a silent investor. I do both. This is the primary issue that startups face, especially at the stage that I invest in, which is a seed round or a pre-Series A round, is to establish a proof of concept. It's very, very important. So I need to understand that the team is solving a problem that's a real problem, and the team then needs to go ahead and find a way to prove that the way that they're solving it is a commercially viable way. Companies are set up to be profitable and to be big and to succeed, and that is measured in a very tangible manner. So I think that most of the focus, well, it starts early. I will backtrack a little bit. I think that it really depends on the background of the team. There are some very young teams that need help with almost everything. They need to be connected to a good lawyer, they need to be connected to a good accountant, they need to be, informed about some of the do's and don'ts about doing business. While the Prime Minister's office has been really pushing the startup agenda, there's many people that haven't really got the news. Simple things like registration with DIPP make all the difference in the life of a startup. So they need that kind of guidance. They need guidance on, reviewing their business plan, looking at the numbers, sitting down and spending hours with them in terms of talking about their go-to-market and strategy. But I don't like to push things. I am more drawn towards entrepreneurs and companies that know what they're doing, that have a strong desire to succeed, and really a sharp focus about their market, their product, and the product market fit. So I will help, I will sit down, I will work with them as and when needed. I don't go and push my thoughts on a startup. I just feel that that's not the way to do business. As an experienced investor, I've learned that it's best not to interfere more than necessary in the growth of a company. Strong founders are one of the key ingredients required for a company to succeed. Sometimes it's just as simple as writing a check and making sure that they have the money available to them. If they need more help, I create a welcoming environment and I make myself available to startups, and I'm happy to sit down and discuss any or many of their issues, but it really has to come from them. My model is to be available. They have to make the decisions about really what their needs are, and I will try to help them as much as I can. The next round is oftentimes the most critical round in the life of a startup. It normally would be a Series A. And I think that this is very hard to raise. The company often is pre-revenue and they've only got a pilot, they've got their product in place, and they need to approach investors. This does take time. I have spent endless hours with startups discussing their plans and reviewing their pitches to be able to go and approach venture capitals. It's rare that I will pick up a phone and make a call to a VC to do a connect or to introduce someone. There have been occasions when a VC has called me and asked me for a reference about a company that they know that I've invested in. What makes a company investable is many different factors. It's not only what they're doing. I don't think any idea today is unique. Many people are doing what a company that I've invested in may be doing, but what makes a company investable is the team and their vision and the image that they project about how serious they are about achieving their goals and building something large. So I get involved in the background. I don't really like to get involved at the front. Again, the model is to make myself available. Sometimes I'm too available, but yes, I make myself available and then it's their call. Co-investors that I work with are normally quite familiar with the angel investing landscape, and they have very realistic expectations. There has been the one odd example of somebody that has not invested in startups before that expects either to be able to get a quick exit or to be able to get pari passu rights or to be able to get something which is not always possible. This does become a challenge, and therefore I try to work together with people that understand the landscape, and the collective challenge, of course, is to be able to ensure that our rights are protected. I think good relationships lead to good results. I think that if you have a good relationship with the startup and the founders understand the value that you've brought to them up till now, your protection is guaranteed, and it's a very natural phenomenon. I think that if you're overly pushy or overly aggressive or have expectations that are beyond reasonable expectations, problems occur. Thankfully, I've really not faced such a situation, and my experience in investing has been very, very fruitful and very, very interesting and very rewarding. It's impossible to ensure good governance. It's more important to be able to instill good values and to share your own experiences about what it takes to build a good company. Yes, I do look at MIS reports and I do look at compliance reports and ensure that the companies that I've invested in are current with their filings and that they have a good sense of respect for their peers, their colleagues, the people that they hire, that they respect their teams, that they take care of their interests. These are important issues to me, and really when I speak about being able to connect with an entrepreneur, it automatically says that we share common values. So again, I've not really faced very large problems. I can't say that there have not been any problems. There have been some, but out of the 100-odd companies that I'm invested in, it's less than 2% that these kind of issues have come up with. Large investors, venture capital investors, private equity investors can and should control the governance of a startup. They have to. But an angel investor has a different role, in my opinion. We take the highest risk. We can provide guidance, we can provide help, we can provide support, but we can't really take control of a company. Our stake is not that large, and the stage of the company is too early. Very recently, I was part of a lead group of a company that got invested by a select group of angels that I put together, and 2 venture capital companies. It became critical for me to work with the entrepreneurs and to be able to speak with the venture capital companies and protect the company that I invested in from over dilution or from giving out board seats or from giving out very high liquidation preferences. It happened very easily and very seamlessly because it's a company that people wanted to invest in. And one sat down and discussed things across the table and realized that, look, let the company go, let them do what they're doing, let them prove their concept, let them build their product, and then we'll see. So whilst governance becomes very important after the concept is proved and once a serious amount of money is put in, the money that we speak about is seed money. It can vary, the round that I participate in can vary between 2 to 5 crores. And that's not really something that, yes, of course, good governance is important from day one. I mean, you have to do what it takes to build a company, but that's not my focus at that moment. I focus more on them building the right product and making sure that their product market fit is correct. We struggle many times. It has to be tweaked before it's ready to go to market. And I think that those are the challenges that I would like to focus on. People who want to build companies should know how to build them, and they need to do the back-end work. I'm there for support.